Alrighty. Well, I guess I can kick us off if we're all ready to start. You guys good?
Yep, let's do it.
Perfect. All right. Well, thank you guys for joining up. This is our third biweekly meeting and part 3 of our Introduction to Technical Analysis. Today, we're going to be going over some secondary indicators, moving averages, and talking a little bit about TradingView, sort of seeing how you'd use these indicators on TradingView. That's the main platform that we do all of our charting on. But almost any broker, any program that you use will have all of these indicators and moving averages and such. We just, prefer using TradingView. It's got a great interface, so we'll teach you guys a little bit about that. And if at the end of this, you guys would like to open up an account on TradingView and pay for their premium service, we now have an affiliate link that you guys can use to get that started. So with that being said, I think we're ready to go. So I'm going to start off talking a little bit about moving averages. So what are moving averages? They are continuously calculated averages of price action over a selected period of time. You're basically taking price action from a stock or other security over a set amount of time that you're allowed to choose. You can set it to whatever you'd like, but there are a few main ones that traders use. And the two most common types of moving averages that people use are going to be the simple moving average and the exponential moving average. There are some significant differences between the two that we're going to be going over, but some people decide to use one over the other, and we'll get into those reasons right here. So this is going to go over a bit of the math behind moving averages. In all honesty, you do not need to know this. I do not have this memorized, but it brings us to a very, very important conclusion. So as you can see on the left, the simple moving average is literally just an average. It's the way you'd calculate the average of anything. You take the total price of everything, and then you divide it by the amount of days. So if you've got, a 20 SMA or 20 moving average, 20 day or 20 period, you would add up the total price from every single close over the last 20 days, and then you would divide that number by 20, and that would give you the SMA point for that day. So this is continuous. Your SMA and EMA will go on forever. So it uses, all historical data to come up with that conclusion. Now on the exponential moving average side, the math is a little bit more confusing, and there are a few more variables in there. Luckily, we never have to calculate that because the platforms do it themselves. But the key takeaway here, and the difference between the two that really matters, is that with this equation on the right, the EMA is more sensitive to recent price action. So you're going to see that, the SMA is just sort of a general smooth line that averages stuff over time fairly equally. The exponential moving average actually puts more weight on the price action that was fairly recent compared to price action that is fairly old. So although you're still taking a moving average over the last 20 days, for example, it's going to be putting more and more weight on the days that are closer to today. So the further back in time, the 19th and 20th days back, those values are going to weigh a lot less on the EMA than the values we have today. So you can continue, Logan. So here's a quick comparison of the two. Here's a little chart I have of Tesla, and I've got 4 lines on this graph. So in the blue, you'll see SMA, the 20 period, and in the pink, you'll see the 200 period. For both of these, we've got a 20 period SMA and a 20 period EMA, and then a 200 period SMA and a 200 period EMA. You can see a little bit of the differences here. If you like taking the pink ones, for example, it's going to be a little confusing, but you'll get what I'm talking about. If you're looking towards the left side of this chart, the pink that's on top is the exponential moving average, and the pink that's on the bottom is the simple moving average. So you'll see that the EMA is a little bit closer to what the true price action is right now, and the SMA is a little bit further. Same thing goes for the 20 period with the 2 blue lines. They are almost exactly the same, very, very similar. However, since they calculate that average slightly differently, you are going to end up getting different values. different traders will pick using SMAs over EMAs or some certain mix of the two. Personally, I use the SMA for my 20 and 50 period, and then I use an EMA for my 200. There are a ton of different moving averages that people use. So, depending on your trading strategy, you can pick what combination you'd like. But what I'd recommend you do is go back, check your charts, use a SMA, see how accurate it is, and then use an EMA, see how accurate it is. Whichever one that you feel provides better results, go ahead and use that. Another thing you can do, which I know is something that Austin likes to do a lot, is you can use these moving averages in conjunction with each other. So instead of just using the 20 period moving average or the 20 period exponential moving average, you can use both of them and keep this little band on your chart. It's not going to give you, maybe an exact moving average spot, but at least you can take the data in from both and sort of use it as a general level instead of using just one of the moving averages instead. If you want to go to the next one, Logan. So here's a little example on SPY during the 5-minute time period. So this is from Friday, I believe. Here you can see with the little chart we've got the 20 SMA in blue, the 50 SMA in red, and the 200 EMA in pink. So these are the moving averages that I normally use. Once again, this could change for you guys, but this is what I like to use. So just analyzing price action towards the beginning of the day. If you go back, Logan, real quick.
It would kick me out if I go backwards. I apologize.
Oh, okay. So that was the 5-minute. Here's a 1-day example on Tesla. You can see that each moving average, the longer the period goes, the more general of the average it is. For the 200 EMA, you can see that that's sort of a line that we stay above most of the time, but we come back down to it and retest it every once in a while. Other than that, the 50 and 20 prove a little bit more short-term support and resistance areas. For example, on that large run-up we see on the left side, Tesla came back, touched the 20 SMA, and then continued moving higher. When we broke below the 50 SMA, we saw a further drop almost all the way down to the 200 EMA. So once again, you can use whichever ones you'd like. This is just a quick example of what my Tesla chart would look like and why I use those moving averages because I find them to be fairly accurate. Logan, next. Yeah, so just to sort of wrap up, why would I use moving averages? Well, here are a handful of reasons and then one consideration at the end. So first of all, they provide a common average for the price of a security over a period of time. Price action on every single day may not be as relevant as sort of an average, so you have something to compare it to. Secondly, moving averages are incredibly popular. Many people trade based off of them. It's a debate, as to why they have the significance they do. But if everybody's looking at the 50 SMA for support, then you're probably, you're all going to be looking at the same number. So that's another reason. Next up, it's great for determining trends in price action. 20 SMA giving you more shorter term, 50 SMA proving a little bit medium term, and then the 200 EMA is more for longer term trends. If you break above it or below it, you've switched, relatively from bullish to bearish or vice versa. Next up, provides you widely used support and resistance levels. Instead of using, previous price action, this gives you sort of a zone, a continuous area that you may see support or resistance. And based on that, you can indicate bullish or bearish moves in relation to the average price over time. The biggest thing to keep in consideration is that moving averages are a lagging indicator. As with many indicators, it's based on the previous amount of time, the price action over the last 20, 50, 200 days. So it provides you this average. You should use that to your advantage as much as you can, but it's not going to be the tell-all. So you want to use it in conjunction with some of the things we'll be going over later to improve your trading. And yeah, that's all on.
All right. Yeah, awesome. Thank you for that, Jacob. And I'm happy that you went over moving averages first, because in order to understand our next topic, we have to have a good understanding of what a moving average is. So the next indicator or secondary indicator we're going to be going over is called the moving average convergence divergence, or otherwise known as MACD. So just a quick background before I go into what the MACD actually shows us and how it could be used. I just like to go over a little bit of a history lesson just to understand the origins. It's not going to help us us a lot, but it's good to know these things. So the MACD was actually created by Gerald Appel in the late 1970s, and MACD has since then become one of the most widely known momentum/trend-based indicators. It was actually designed to reveal changes in the strength, the direction, the momentum, and even the duration of a trend in a financial instrument's underlying price. I say financial instrument because it can not only be utilized on stocks, like equities, but it can be utilized on virtually anything that you could chart, right? So whether that be commodities, assets, whatever it may be, anything that you could put on a chart that can be used on TradingView, right? MACD could be utilized for that. So there's a reason why MACD is one of the most sought after indicators today amongst investors and traders around the world. And you can just go over, yes, okay, perfect. This is what I wanted to get into next, the anatomy of a MACD. So as we said, what MACD does is it pretty much identifies momentum in trend shifts. So its main job is to show the relationship between two lines, right? And those two lines are the MACD line, which is the 12-period EMA minus the 26-period EMA, and the signal line, which is the 9-period EMA of that MACD line that I just said. As well, in the MACD, we have something known as a histogram, which is allowing us to visualize the difference between the two lines we just talked about, and as well, which is the zero line, which is kind of the middle line going through the whole MACD, and whenever we're above it, we're positive, whenever we're below it, we're negative. So that's just kind of the anatomy. These numbers can obviously be tweaked. If you go on to TradingView and go into settings, you can change all this stuff for you, but this is the default anatomy of what a MACD is, okay? So here we go to our first example, and if you guys know me, you know I like Bitcoin, so we're using Bitcoin for this example. And what we have here on the bottom is our MACD, and on top, obviously, is our asset, which is Bitcoin. So we can see that the MACD line, right, which is our white line in our secondary indicator, which is the 12-day, this is a daily chart, the 12-day EMA minus the 26-day EMA, and then we have our signal line in the yellow, which is the 90-day EMA or the 9-day EMA of the MACD line, and you can see how these lines behave along with the underlying asset, which is Bitcoin, right? Whenever we go way down, you can see that our MACD line goes well under the zero line, and that's kind of where we look for to see reversals, right? We like to look for a cross in our MACD line over our signal line that usually signals us that the trend may be changing and we could be in for some new price action. But MACD is not only utilized to see where price is or where the momentum is going, it can be utilized to recognize stuff known as divergences, right? And that's what the next example is going to be showing right here. If we go to our next picture. Yes, okay, perfect. So this is the same chart that we just looked at before, only it just has some different stuff for visual purposes, right? So as you can see in Bitcoin, around the March time, we were still going up. We were still making higher highs and higher lows. But if you notice, our MACD was actually making lower highs and lower lows. This is called a bearish divergence. So the momentum and strength of the underlying asset was decreasing while the price was still increasing. This signals to everybody, or not to everybody, but to people who have noticed it, that perhaps the trend is weakening and we could be looking for a reversal soon. Shortly after, we fell and found ourselves into a bullish divergence, right? Where our price action, the price of the underlying asset, which is Bitcoin, was making lower lows and lower highs, while our MACD was rising, making higher highs and higher lows. So the underlying price was going down, while the momentum and the strength of the asset was going up. This is bullish, right? This obviously is bullish when this happens, and you can see how the price action reacted shortly after that. So this is a fairly good example to show what a MACD, how MACD can be utilized, especially on a macro chart like this. Keep in mind, this is a one-day chart. You can go to the next one. Yes, okay, great. And then this is the last example I'm just showing for a visual of MACD. This is a much lower time frame. I would consider this a macro time frame of AMD. And what I'm showing here is that sometimes there doesn't even have to be divergences. Sometimes if you just follow MACD, it can actually give you some decent trade points just by itself. So right here, if you were to follow the MACD and you were to buy and sell at every single bearish cross and bullish cross, you would have actually played this this little sequence here fairly well. So keep in mind, MACD is a lagging indicator, like Jacob said, right? Along with moving averages, MACD utilizes moving averages, so it is a lagging indicator. And yeah, so you could have traded this quite well, and there was no divergences. You could see later on there was a divergence as we went in for a second peak. Our MACD made a much lower second peak, so you could see that would have been hey, it would have been letting the trader or investor know maybe the momentum and strength of this asset is going down, and maybe we could be in store for a reversal, and that's kind of what we saw right there. So you can see how MACD can be a very powerful tool for determining momentum shifts in the market. That's
Cool.
that. Yeah.
Well, first of all, I'm a huge fan of the MACD, and I think you did a great job explaining it. And I'm also really glad you touched on divergences, because I'm going to also touch a little bit more on divergences in our third section, which is going to be the RSI. And the RSI is one of my still favorite indicators after years and years, so I'm really excited to be able to share this information with you guys. The Relative Strength Index is one of the most popular momentum indicators in the world currently. I'm sure if you've been trading for a while, you've heard about the RSI. It measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock or other asset, whatever is essentially on the chart, right? So it is a momentum indicator, and a momentum indicator is a technical tool that measures the rate of the rise or fall of stock prices, or again, whatever asset you have charted. So some other notable momentum indicators besides the RSI is the moving average convergence divergence indicator, the MACD, as Austin just went over, the ADX, the average directional index, and also the stochastic oscillator, which is another fantastic tool that you can implement in your trading. So in my experience, the most popular RSI period is the 14-period RSI. And essentially what it means is in the mathematical calculation that is the RSI, it takes all of the data from the last 14 periods. So this is the most used, and as markets move based on herd behavior and social sentiment, it is therefore the highest probability period for this specific indicator. When utilizing the RSI, we utilize the RSI for mainly two things: reading overbought and oversold conditions, and also, as Austin was just touching on, divergences. So, first of all, what is overbought and oversold? Overbought is an RSI reading above the 70 level, and you'll see what this means when I go into the next example. We refer to the overbought level as OB, just to abbreviate it, and this means that prices will likely retrace and fall in the case of an overbought situation, if we're reading overbought on the RSI, meaning the RSI reading is above that 70 level. And on the contrary, the opposite side, we have the oversold, which is an RSI reading below the 30 level. We refer obviously to the oversold as OS, and this means prices will likely rise if we read oversold on the RSI. Here is an example of an RSI that I obviously widened, and you can see here at the 70 level I added a green line, and at the 30 level I also added a little green line. This is just to show you, and then I pointed out where we are reading overbought and oversold via these arrows. I hope this makes sense. Even if we touch one of those levels, that means we have reached either the overbought or oversold level. So here is an example. My apologies, that there shouldn't be two charts there, but as you can see, we have the overbought reading, and right after price reads overbought, we have a quick decline in prices, and the same happens at this high here. And as you can see here in the oversold level on the far right, prices start to rise on the right side of that chart. So besides from overbought and oversold, which I actually forgot to mention, is something that I use for take profits in my scalping trades. So overbought and oversold is a fantastic reading for obviously prices going to retrace. Take profits is just one example of using them. Divergences. As Austin just went in, divergence is the disagreement between price and an indicator. For divergences, we can use the RSI or stochastics, as well as the MACD, to find these disagreements between prices and the indicators. Here is an example. On the bottom, you can see there is a lower level on the RSI as we read oversold, and then there is a disagreement in price. While prices are falling, the RSI is rising. After we get that second touch to that divergence line and a quick consolidation of prices, price then proceeds to head higher. And here's another example where price is heading higher, but the RSI is moving lower. And as you can see, after we get two touches on this divergence line, prices then start to rise. And also, what I've realized in my trading is if you can get 3 touches to the divergence line, that is a very, very high probability of reversal. I call that my sauce. So that was my session on RSI, and thank you all for joining again. We're just going to head into TradingView now, where we are going to show you from the ground up how to use this platform and also add the indicators that we just went over.
Yep. That's the most important part, right?
Absolutely. So here is a blank chart on Bitcoin. I made a completely new template. So it might be different colors, but this is essentially what you're going to see. And you'll also have a volume indicator that reads down here when you first log in. To add these indicators, you're going to go to the indicator section right here, where it says indicators and strategies. And you can type in moving average, obviously, and moving average exponential to get those EMAs and MAs that Jacob was referring to. And then if you would like to get the RSI, you could type in RSI. It is the built-in relative strength index. And then for MACD, same thing. Built-in MACD. The really, really cool thing that I love about TradingView is it doesn't just have built-in indicators. TradingView really empowers their editors. And can somebody remind me the name of the scripting?
Pine Editor.
So Pine Editor is a built-in coding platform on TradingView, and people can create their own technical indicators. So as you can see here, if we go into the public library, all of these indicators are made by traders just like you and I and random people that use TradingView. There's a lot of really cool stuff you can find on here, and you can even try to make your own strategies based off some of these public indicators. One of my favorite parts. If you want to look at just the built-ins, you can obviously go to the built-ins and see here. And if you use something a lot and you're playing around with your charts, whether you're testing a new system, back testing, whatever it may be, if you find something you really like let's say I wanted to add Bollinger Bands, you can just quickly favorite it, and then it'll be added to the favorite section, just like I have my moving averages. So let's just quickly throw in some moving averages as well. And now we're going to show you how to change the periods to the specifications we were talking about on the slideshow. So Jacob specifically went over the 20, and you got to that by going to the MA, finding this little gear option, or even going here and going to settings. You can actually also do this by right-clicking on the indicator and then changing the length to 20. If you want to then change the color, as Jacob had different colors, you can do so here in the Style tab. And let's say I want my 20 MA to read as red. You can obviously change that. And then to change your EMA, the same thing. Go to Inputs, go to 50 if you want to set it as 50. Go to Style, and let's say I want a green one. You can change that there. So the MACD and the RSI are the two indicators that Austin and I went over, but it just so happens that we actually use these indicators most of the time on their base settings. So you don't have to change anything there.
Yep.
But something that I used to do is you can change, if let's say you don't like that band at the top, you can get rid of it. You don't like that middle dashed line, you can get rid of it. They're very, very modular. You can change the colors. You can even, let's say I don't like this on top. I want to move it lower. Click this little arrow right here, move pane down. You can move anything you want. You could even set your chart on the bottom if you wanted to, or in the middle, whatever you wanted. That's the thing I love about TradingView. It's so modular. It's fantastic. So that was showing you guys how to find the indicators and set them to the proper settings. I'm just going to go into a bit of more details about TradingView because this is such a great platform and we all use it. So one of the favorite things that I actually like to use, besides the fact that TradingView, you can chart any asset you can think of. You can flag things. As you can see here, I have a lot of different things flagged for different videos that I'm making. So if I find a trade or a pair that I'm trading that is going to set up shortly and I need to keep my eye on it, I might flag it as red. Or if I'm in a trade, I might flag that as green or purple or blue or pink, whatever you wanted. And then up here at the top, you can go to your watch lists. And as you can see, I have one for ETFs. Thank you, Jacob. One for my firm, one for OBR, one for relative strength. And you can set up all of these watch lists as you'd like, but you can also go, if you just want to see the trades you're in, go to just the red tab, just the red list, whatever you wanted to do. Obviously, you can change the names to change this whatever you want. And that is one of my favorite things. As well as that, you have every tool you could think of besides indicators. So let's say I wanted to draw a trend line. We have a trend line tool. It's in the first tab right here. Wanted to connect these lows. You can do that. Let's say you use the trend line tool a lot. You can favorite it by clicking this star right here, which presents you with this little bar. These are all of my favorited tools. As you can see, if we wanted to go long here, all I have to do is add a long position marker by clicking right there, and there we go. I have a long position. Let's say I want to measure how far price went in this distance. I could grab my measuring tool and measure. If I wanted to count a wave count. Very, very easy with this favorites bar. You can move it literally anywhere you want as well. So as you can see here, there's many different things you could draw with, tools you can use, some tools that we don't even really touch, but that's why you can configure this to the way you like it with your favorites bar, or just remember where it is, like Austin does.
Yeah, I was about to say, he thinks I'm a crazy guy because I don't use the.
You think he's a crazy person for not using a favorite bar.
Yeah, no, I just used the whole thing and I kind of figured it out. It's TradingView's very subjective, right? There's no really wrong or right way to use it. You can, as long as you find a strategy that works for you, then that's awesome. So we love TradingView, and especially what we said before, you can chart anything on TradingView. So, if you don't have any experience with TradingView yet, you haven't really dabbled in it, I strongly recommend you get started today and just start messing around with the platform. It's so beneficial for technical analysis, right? I know Thinkorswim is great. I don't know if Webull has their trading platforms, but we definitely we feel very strongly about TradingView that it's the most dominant platform to do technical analysis on. So
it definitely is. I've been trading for 5 years and I've looked at every single execution platform that you could think of probably. And in my opinion, TradingView beats out every execution platform. I don't really think it even has any competition. It's just so modular and very clean, honestly, while some of the other platforms aren't. So that's why I prefer it. But something else I actually wanted to quickly touch on is chart layouts. So if I found this set of indicators that I really like, and let's say I even had trend lines drawn, I can save this chart layout the way everything is set up right now. By clicking this, it also auto saves, and then you can go to load, you can go to load, you can save it, obviously.
Or you could publish it.
Yeah, you can also publish it, absolutely. You can publish videos as well on TradingView just by pressing this button. Obviously, you can take a screenshot right here. Very, very easy. They also added this tweet chart image option, which I've been using a lot. Really great option, actually.
Logan, I didn't want to interrupt you, but it's kind of amazing. Not only is this a platform for technical analysis, but it's largely, turning into a social media platform for people to show their work. You know what I mean? So if you ever were to go onto the TradingView homepage and let's say you typed in Apple, you would see a bunch of published works of technical analysis on Apple from like just the entire community, right? So this is very much, you can connect with people, and it's great, so. Go ahead.
Fantastic. Yeah, seriously. Here's just a couple of my chart layouts. I have one strategy pretty much on each, and then I have one for testing, which is the one we're on right now. Just to touch on that social aspect, if you actually go to Ideas Stream right here, you can see everybody that you follow. You can see this guy posts a lot. You can see everybody you follow there. Also, you have a chat option, and you also can see random chats that pop up. This is the cryptocurrencies chat in TradingView. I'm sure they have a lot of very fun conversations. They have FOREX with 11.1 million users, 8.6 in stock and indices or indexes, and even one for Russian traders. Very specific. I love it. Something else. I love this feature is alerts. So alerts, let's say that I wanted to know when price got to this level. You can go right here. You can also right click, and then you go to add alert. It'll present this page. It can send you an email. It can send you a text, or it'll just notify you on your app. It's very, very cool.
That is super badass. Yeah.
You can even change the message. OBR rocks. If we reach this price, I'm going to get a notification on my phone that says OBR rocks. And you can just leave it there. And once price reaches that level, you can even do it on indicators. If you if you wanted to know when we got overbought or oversold, you could set an alert on the indicator, add alert for RSI, and that works as well. So the last thing I wanted to touch on is actually two things. I apologize. Not just can you use candlestick charts, but they have every single type of chart you could think of. They have bar charts, which I like to swap out and use sometimes. They have line charts, area charts, baseline charts. You might not have even heard about Renko charts. Here's what a Renko chart looks like. So lots and lots of options, obviously. If you wanted to quickly remove everything on your chart, you can just click right here, remove drawings, remove indicators, or remove both. And if you wanted, let's say you wanted to compare SPY to the DJI, you can go to this compare option, add it right here, and as you can see, here is a line chart compared to the S&P of the DJI. You can change this to a candlestick chart, right here. So you can even compare different assets on the same chart by looking at it. It's very, very cool stuff. So that was everything on the top of my head. Austin and Jacob, did you have any other notes that I missed?
No, you hit everything that I was kind of looking at. I was excited for you to talk about the comparison one. I use that tool all the time. I'm always comparing assets. Maybe just show them like a flip around how you could maybe add different time frames, right? Like if you wanted to, right, you could look at a 2.5 minute time frame, which
How
I
did I
find
forget
is
about that?
yeah.
How did I forget? So here is my favorited time frames, which you can set just like the favorite bar by going to this little drop down arrow right here and favoriting everything on the side that you want to use. But let's say I just wanted to change really fast. I could hit 5, automatically gives me a 5-minute chart. Hit 3, get a 3-minute chart. Hit 2, get a 2-minute chart. You said you could find 2.5-minute charts? I didn't know you could do that.
You could, yeah. I'm pretty sure, or yeah. There's a lot of freedom with the amount of different time frames you can use. Perhaps you can't use a 2.5 minute, but I've messed around with like 3-minute, 4-minute charts, just stupid stuff. But it's just you have a lot of freedom. Yeah, 3. Yep.
I didn't upgrade, but if you wanted to, you
Right.
could get a 30-second chart.
Yep.
Yeah, so if you want second charts, you have to upgrade to their Pro Plus.
Yep.
But that's obviously only if you need seconds charts. Personally, I don't trade off the seconds charts. Something else I really wanted to touch on. Oh, I just lost the thought. It was I got it. So something that you can do on TradingView, which is actually super beneficial. This is some gold. I really hope you guys use it. Is you can create baskets, which are not something that you would normally chart. So something that we found that worked for us was Bitcoin versus the M2 money supply, which you can type into it, as well as something that I did for my Forex trading is instead of looking at just the DXY, I created my own Japanese dollar index. How did I do that? I added up all of the Japanese currencies, divided it by the total amount of currencies. So as you can see, there's 7 different currencies. All of them are JPY base pairs, and I divided it by 7. This gives me pretty much a Japanese dollar index, well, in this case, a Japanese yen index. But this is just one example of how you can multiply and calculate different things and create very, very interesting charts. And correct me if I'm wrong, Austin, but this is M2.
Yep.
What is it?
You might have to do BLX WM2.
Yeah.
Yeah.
NS.
There it is, right there. Yep.
Perfect. There we go. Perfect. So as you can see here, this is a Bitcoin chart divided by the M2 money supply.
Also, since you aren't on it, you want to go over log charts real quick?
That's another thing. Yep. Logarithmic
So
chart. Yep.
if you wanted to change to logarithmic charts, you can just click this little log button right here, and this will change it to a logarithmic chart. Absolutely.
And if you don't know what a logarithmic chart is, right, and it's okay if you don't know, all it is it's altering the x-axis, or I'm sorry, yeah, is it the x-axis or y-axis, whatever, the right side. Yeah, so what it does is it makes that exponential. So when you go to a logarithmic, it'll make it so all price action is very visualized, and it won't look so like that, right? You can't read, like if Logan wanted to do technical analysis on Bitcoin without using logarithmic, he would look at 2014 and that would be very hard for him to do technical analysis on, right? But if you switch to logarithmic and you change that to an exponential, right? There you go. Then you can see the underlying asset or equity much clearer. Very, very different. Yep. And personally, right, it's all subjective. There's nothing wrong with doing your technical analysis on a logarithmic chart or not doing it. It largely comes down to preference. I know me, as well as all the other analysts at OBR, all do their technical analysis on logarithmic charts. So yeah, that's what we recommend. But obviously, if you find a strategy that works for you and it doesn't involve logarithmic charts, then there's nothing you don't have to do that, right? It's just that's just what we do.
It also really depends on the asset. Like if you're trading crypto, you should definitely use a logarithmic chart. But if you're trading currencies like myself, it's not completely necessary because the difference isn't huge. But it's obviously a lot bigger of a difference on cryptocurrencies. And I know Jacob hasn't even really been using logarithmic charts until recently. So
yeah, I used normal charting for a long time, like year and a half or 2 years, and then starting at the beginning of this year, I played around with logarithmic charts, and now I almost solely use logarithmic charts. That's just because, I liked that. First of all, with cryptocurrencies, it made it a lot easier. And second of all, I just sort of was comparing the two for a while, seeing any differences, benefits to one over the other. There are certain cases where one may work over the other, but in general, I just decided to go with log, and I have never considered going back. So that's a personal decision, but I did chart using regular charts for a long time before, and it worked fairly well too. So
Cool. Well, you might be thinking, now that we know how to use these indicators and now that we know how to get them on TradingView, my biggest recommendation for you, while you're finding if those settings that we gave you work or if you want to try different settings, is to backtest. And it just so happens TradingView recently, as of a couple months ago, implemented a backtesting tool that you can use, which is the bar replay tool. So if I wanted to backtest on Bitcoin, I could then just go to a random date and time, and right here, you can see, you can adjust the speed that it goes, and you just press the play button, and obviously the charts will begin to play, and you can use this to eliminate hindsight from your backtesting when you're going through historical data and testing new systems or testing existing systems. So I've used this replay tool. I can't even state to you how many times, but it's a tremendous, tremendous help when you're backtesting, which I highly recommend everybody does if you don't.
Yeah, and look
And
how
this is showing
amazing. Yeah.
a great use of moving averages, as we see right here as well. You saw it come up, retest that 20 moving average, bounce right back up off of it, retest it again, move higher, and then as we broke down below the 20, we hit the 50, found support there, boom, moved back up higher. So just something I noticed during that, kind of funny.
That's what. Yeah, it's beautiful. It acknowledged them perfectly. Yep.
Is it funny or is it just the truth?
It's the truth. It's the objective truth. Right.
That is why we use them.
Maybe perhaps it's funny that it is the objective truth.
I just thought it was funny that it just perfectly played out like in front of our eyes.
Yeah.
Here is a fantastic example,
you chose.
2 examples of what a moving average cross trade would be like if you used that in your system. Right here, we have an engulfing candlestick, which is obviously has a body through both MAs, or in this case, one EMA and one MA. But this would obviously, if you were using MA crossovers as a trading strategy, that would be definitely an enterable system or enterable setup for sure.
Awesome, Logan. I appreciate that. You did a really in-depth look at TradingView. And if anybody has any questions regarding any of the stuff that we just talked about, whether it be about TradingView, whether it be about the secondary indicators that we spoke about, if there's anything that you have a question about, we are all ears, and we definitely want to answer those questions, because I think we talked about everything that we needed to. Logan, Jacob, is there anything else that you guys wanted to say before we move into questions?
No, I think we went over everything. The big thing I just want to remind all you guys, the way that we share our TA with you and everything is by using TradingView, using that camera button in the top right, which gives us a link that we send. So if you guys, if you don't chart with TradingView but you want to get started, another reason it can be super helpful is for, you'd be able to send your TAs in. We can critique it, we can talk about it, say, oh, actually, I wouldn't put my resistance there, I'd put it a little lower, whatever it may be. That's beyond, by far, my favorite feature of TradingView, just the fact that it is so easy to share your charts, send them between each other, and, share ideas between people. So if you guys start using TradingView, be sure to send in your charts whenever you can, because we would love to take a look at them. You can always learn something by looking at someone else's charts. Even we can learn from you guys. So just sharing information, TradingView makes it real easy, and that's why I love it.
Also, if you become a TradingView ninja, you can remember the keybinds for specific drawing tools. Like the only one I know specifically is the horizontal line, but if you press Alt and H, you get a horizontal line. You can just be dropping these things everywhere if you wanted to. Cool. That was all. I think we covered everything.
Yeah.
Question time.
Yep.
Yeah, so if you guys have any questions about any of the indicators or moving averages, feel free to speak up or send a message in live chat VCMU, and we'd be happy to answer those for you.
And it wouldn't surprise me if, we didn't have any questions. You went over everything pretty thoroughly. I do see somebody typing. Fantastic day outside today. Is it a nice day wherever you guys are?
Oh yeah.
Sure.
There you go.
Beautiful here, bro.
Oh, this is a great question for you, Logan.
Okay.
What are the reasons for technical analysis failing?
Okay, well, the reason for technical analysis failing, that's a fantastic question, by the way. It would be the fact that, well, I have a couple of different answers, but I think the main answer is the fact that the market does whatever it wants, and there's definitely large players at hand in the market, which can move pretty much all markets, and that is what drives markets, right? It's herds of people. So I guess the reason for technical analysis failing would be that every entry system only has a specific statistical probability of succeeding due to the fact that there's you and I, as different people, you and I, Jar, Juice, Bra, we would make different decisions placed in different situations, right? So if we see something and you think it's long and I think it's short, and we both have different entry systems, then we both would be set on our hypothesis. One of us may be right, one of us is going to be wrong. Whoever has more people behind that entry system and more money behind that entry system or direction is going to be the one that wins. So in the end, it's really just statistical probability because everybody reacts differently. But our main goal is to get behind the herd, get behind, understand what everybody's thinking and why, and then ride trends in that direction.
Yeah, can I speak up on this real quick, Logan?
Of course,
I think
of
you covered
course.
some real good stuff. But there are a few other reasons why I want to mention as well. So first off, if we're strictly talking about stock markets, I know this, this follows with, well, realistically all the markets. Another reason TA may fail is because of news, or in the stock market, events like earnings. Basically, you may have a TA set up. This is something that happens all the time with earnings. You can do as much TA as you'd like right before an earnings move, and you may be 100% convinced that a stock may go up. But the truth of earnings is that this is a fundamental change to the underlying asset. The news that is coming out at an earnings report changes the value. It is new information released to the market that changes the value of this security. So, although you may say, a bullish flag is forming here, we expect it to go up, we just bounced off support, whatever it may be, an earnings report comes out about the company that says they weren't able to meet their predictions for the last quarter, and their stock is going to tank. So there are certain news-related events that may break TA. In some cases, it can follow through. But if I'm ever charting out or anticipating news or something like that, TA can only hold up so well because news can be a massive factor in that. Another thing I want to say about TA, the nature of it is very subjective. You can put a support and resistance line wherever you want on a chart. There is no necessarily, you can put it wherever you'd like. There are significant and legit support and resistance levels. But if you're just throwing lines, sort of randomly on the chart, sort of like trying to find something, that may not actually be a significant support or resistance line. So you need to make sure that, going through with practice, and this is actually something that TradingView's, what was that tool called, Logan, where it plays back the
Replay.
price action?
Replay.
Yeah, the TradingView replay tool can be very, very useful for you. You can find a setup, do your TA on it, go, all right, if this was happening, I'd expect us to go higher from here. And then you can play it forward and see if that happens or not and kind of check yourself that way. That just, comes with experience and stuff like that. But once you get, it becomes sort of an intuition, seeing these support resistance lines, seeing trends and things like that in the charts, and you become much more accurate with your charting. So, when you start out, you may be looking at levels that aren't necessarily that important. And then, I'm sorry I'm going on again, but the last thing is that, especially with these indicators, one thing I see a lot of people do and act on, which I disagree with because I've learned over time, indicators are just indicators. They don't guarantee something to happen. There's a saying that the markets can stay irrational longer than you can stay solvent. This is one thing I consider a lot when using an indicator such as RSI. RSI shows the relative strength. Just because something is oversold does not mean that it has to get bought back up. I don't have the example in front of me, but Baba, for example, Alibaba, has been oversold for a very, very long time. However, more and more bad news about these China stocks keep coming out, so it keeps dropping. Just because, your RSI reaches 30 or reaches 70 or your MACD crosses, you want to use that in conjunction with other things, but don't 100% expect these indicators to work all the time. You need to combine them, use them well, and just because an indicator pops off doesn't necessarily mean that you're going to see an exact reaction right then. Yeah, so that's kind of all I've got, but just another important point that I wanted to bring up, because sometimes I see people say, oh, Apple's so oversold on the 1-day chart, like we've got to move higher from here. But then, we could probably go a little bit lower before we do.
I like your example, Jacob, that you used with Alibaba. That's like the perfect example for looking like people. How long? Like you think about all the traders and investors that thought they were buying the dip, but we just kept on going lower. Probably because they were looking at these secondary indicators and thinking, oh, how much lower can we go? We're the most oversold we've ever been in this equity's lifespan. It's got to turn around here soon. But in fact, it didn't even matter what the secondary indicators were doing. You know what I mean? They were completely irrelevant, and no matter what was going to happen, the equity was going to go down just because of outside events. And Bitcoin is a great polar opposite to that, right? If you look at higher time frames of Bitcoin or cryptocurrency in general, right, that stuff can stay overvalued for a very, very long time. You know what I mean? So it's a complete polar opposite of BABA in that sense. So, you can't take them to the house. Like Jacob said, they are secondary indicators. They are lagging indicators. They are just one of the many tools that should be in your toolbox when making a trading or investing decision.
Yeah.
Right?
Yeah. So with the BABA example, just because I just pulled it up and saw it, had its high in October of last year. The first time RSI on the daily chart went to the oversold territory was in December of last year. It then bumped up a little bit, so you could have made a slight trade there. However, we were oversold again in May of this year, significantly lower. And again, we became oversold in August of this year. So maybe you could have made a short-term trade and made some profits, but the overall trend, just because RSI made it down below 30, the stock has consistently been going lower ever since its high. So, yeah, just a little thing to keep in mind when using these types of indicators.
Awesome.
One thing I forgot to mention, and it's definitely worth mentioning, is you can create amazing TradingView drawings, and we actually have a talented artist in here. Mr. Lickneck is a very, very, very gifted TradingView artist.
I suppose I am. This is a quite silly thing, but it's true. The drawing tools on TradingView are quite interesting, and you can get quite creative with it. So it's fun. And as you can see, Logan Silver did a nice little portrait for OBR.
This is my freshly minted NFT. If anybody would like it.
Yep.
Starting at $150,000.
Great. That's a great price to start your NFT at.
Cool. Do we have another question?
Yeah.
If anyone's got any questions, feel free to speak up or send a message in live chat VC Mute. We're here for you guys now. But I understand it's a Saturday, so if not, then we can call it.
Yeah. So we'll give it like 2 minutes here. We'll give it 2 minutes.
I really hope the information today will transpire into some use of the tools in your own trading.
Yeah, or just maybe a switch over to TradingView, because I feel like that's a big
that as
thing.
well.
Yeah,
for sure. And like, if you think I don't really have a use for secondary indicators, all I'm saying is one of my most profitable trading setups is from technical secondary indicators. So you can use naked trading for one method or one strategy that you may be using, and then you can use secondary indicators for another one.
Okay, Logan, so we got one more thing. Somebody said, I tried to do a TA on Tesla. Could you guys maybe go over it? So what I think would be a fantastic thing here, maybe you could go look at Tesla, and maybe we could take a look at these indicators that we went over and just kind of do a little observation. Now, we don't have to go super in-depth with price predictions or anything like that.
Let's not go too in-depth with the TAs today.
Yep.
We don't get too off topic, but we can definitely do that. But another fantastic note is Mr. Don't Play Spy Puts would be to send it in currency chat or stock chat, and we're gladly going to review it. Or you could even bring it up during one of our daily live chats, and we can go over it that way as well.
For sure.
So let's add back what we were using, MACD.
Yeah, I'm curious to see where our MACD and our RSI are on a daily time frame for Tesla.
Jacob, spit me the moving average we're using, and if they're exponential.
20 SMA, 50 SMA, 200 EMA. And you're going to see something real cool with the 20 SMA on the daily chart in Tesla
Give
right
me the
now.
lengths again. My apologies.
Really
20. One's 20. One's
simple 20, simple 50,
okay, and then
exponential 200. Simple 20 is pretty dope right now on a daily chart.
Change the colors up.
Beautiful, beautiful.
Daily chart.
Yeah, I have my 20
Oh,
as
beautiful,
blue.
beautiful, beautiful, beautiful.
Yep, right there. So these are the moving averages that I personally use when I trade.
You want me to play devil's advocate?
I want you to play it.
All I'm saying is, oh no, it's not. I'm wrong. Sorry, I can't play devil's advocate. I was incorrect. I was going to say there's divergence, but it's actually not.
The 200 SMA actually did a little bit better job here than the EMA, but which I only realized after looking back. But overall, I like using the 200 EMA more so than SMA.
So Logan, looking at these indicators, right? So we have our moving averages in front of us. We have our MACD. We have our RSI. So what can we take away without considering anything else? Just what can we consider from the MACD, the RSI, and what the moving averages are telling us? Just from like a very simplistic point of view.
Yeah, absolutely. So obviously it looks like when we look at this, if we zoom in, the MACD is about to cross in a bullish way. It's about to cross upwards with the slow period below and the fast period above. That's what we like to see. Also, we got a obvious clean engulfing candle right off of that 20 MA, which is a beautiful sight to see, especially if we're looking in terms of candlestick patterns. So that is also another bullish reason. The only thing that I would say besides this is the fact that we are getting close to the overbought level, but we're not there yet. And considering this is a daily chart, we definitely have more room to go before we reach that overbought level. Just by looking at the indicators. That's what I see.
Just by looking at the indicators. I agree. Yeah. Yep. And you can see how right, if you look in the past, right, where Tesla peaked, you can see the RSI and the MACD, how right, they spiked up very aggressively. You see the RSI right around there. It was very overvalued. What did the RSI go to at its peak right there?
83.
Yeah. That's pretty and from there we saw, there would be some truth to, you could have made a very strong case to sell all your Tesla shares or contracts, whatever, if you're playing options or whatever. At that point, you could make a fairly strong case. Hey, maybe I want to start dollar cost averaging out of this position. Maybe I want to go and move some funds around, because Tesla, though it could stay overbought for a very long time, it sitting around that 90 level doesn't really make me feel comfortable. And if you were to get out of that position, which I did, right? I sold most of my Tesla at $860. Then it would have been a fairly beneficial trade, right? Just by looking at indicators.
I just realized he actually sent his TA in LabChat VC Mute.
Oh, great.
So if you want to open that link, then if there are any differences between what we have.
It's very, very similar. He's utilizing some supply zones. I believe they might be Fibonacci levels. But yeah, very, very similar to what we have on Logan's screen.
Did you get this resistance fractal by connecting this low and this high? I'm going to guess so.
Yeah. He said yes. He said yes.
Cool. Yeah, that makes sense. Definitely.
Yeah. So we definitely encourage you guys to send in your TAs and ask questions. That's what we're here for. So, but I think we did a fantastic job of going over these things today. If anybody else really does have any last thoughts, please definitely ask us. That'd be great. But if not, then we can go and enjoy our night. And this video was recorded. We're gonna try to edit it and make it the most visually appealing as possible. But yeah. So that's pretty much all I had. Logan, Jacob, do you have any other closing thoughts before we wrap things up?
No, man. I think we went over everything pretty in depth.
Alrighty, folks. I appreciate you guys stopping out today on a Saturday night. That's super badass of you guys. And we'll see you Monday morning for market open. We'll be around here Sunday though. Crypto market stays open, so we're around.
Absolutely.
Yep. Alrighty, folks. Thanks for stopping
Thanks
by.
for coming
We'll
by.
be yep.
Have a good rest of your
We'll be
afternoon.
back in 2 weeks. So what date is that? Before we leave, let's just see. What day is 2 weeks?
The 9th.
October 9th will be our next educational call, and we'll have a predetermined topic for that, probably within the next week. So I hope to see you guys there. Alrighty.
Oh no, I'm kidding.
Alrighty, guys. See you later.
All right.
Have a good
Bye,
day.
guys.